Hello everyone, I say welcome to the Giant Markets. It's another episode of the Giant Markets, and I say thank you all for tuning in to this great episode that we're about to do. It's legendary today. We wanna transform our lives, we wanna transform our minds, we wanna transform our thinking in terms of how to understand the financial markets. So stay tuned for more of it all. As I always say when we are talking about the markets, the idea here is for me to make you understand, to make you have an idea of what are the fundamentals of the markets, because the market is driven by two things, which are the fundamentals and the technical analysis. So in this episode, we want to talk more about the technical analysis, because the technical, it deals with you having to understand how the market is when you're opening up. Let's say you're opening up MetaTrader 4, MetaTrader 5, whichever platform that you'll be using for you to trade. The thing that you see, whether it's the candlesticks, whether it's the line, mostly here we're concentrating more on the candlesticks. So when you are opening the markets and you find the candlestick, you have to be able to read what the candlesticks are saying at that moment. So that's why when we are, as I am presenting to you in this channel, I want you to have a clear understanding of how the technicals are like, so that you are it's easy for you to trade in the markets. So right now, what I want to talk about today, I want to talk about the hammer candlesticks. So this hammer candlestick, it's one of a critical candlesticks. It's very important because it gives you a summary and it makes you to understand of what the market is actually doing at that present moment. So in my previous episode that I did, I was talking about the hanging man candlestick. The hammer and the hanging man candlestick, they are one and the same thing. They are similar in what they do, but these things, they happen in different areas. So if you can go back to my previous channel, that's where you will have an idea of what I was talking about. You'll have to understand of, because this episode is more of continuation of what we did on the previous episode. So go back to that episode, click subscribe and like and watch the video and comment about it and tell us what you learned about that episode. So I'm here now to tell you about the hammer candlestick. So the hammer candlestick has the same shape as the hanging man. The only difference is that a hammer comes after a downtrend. So a hanging man comes after an uptrend in the market, because it's actually telling you that the market is about to turn and reverse and become bearish. While the hammer, it's when the market has gone down and it has become bearish and it's now deciding and say, now we're about to turn and become bullish. So that's the hammer. It's like it's hammering down the market. It's hammering down everything because it's now going back. So here are the characteristics of the hammer. So it is a single candle bullish reversal pattern that can be spotted at the bottom of a downtrend. So what you have to know is that in the market, the candlestick, the trend will be looking down and you to be going down, having that momentum of going down. But it comes a time whereby the momentum or the sellers will be exhausted at that time. Then there will be a change in the market, and that change will result maybe in a certain trend formation, and in that trend formation, that's where you will see something called a hammer. This hammer is what will be telling you that right now there are no high chances that this platform is going to continue to go down, but there are high chances that the bulls are now taking over the markets, and there will be a bullish movement which will cause the market to go up. So the open, the close, and the top are approximately at the same price, while there is a long wick that extend lower twice as big as the short body. So the characteristics of a hammer is that the close and the open and the close, they are at the same place when this candlestick is formed, like you can see. So there is this long wick which is actually twice the body of this open and the close. So that's more of what the hammer is all about. So what I'll be talking to you now is the importance of the hammer. So the color of the body is not important, because whenever you see this representation of this hammer, know that the market here is about to do something different at the present moment. This indicates a bearish rejection from sellers and their intention to push the market down. So the hammer is one of the most critical candlestick in the markets, because that wick that you see in the hammer, it's a sign that there were sellers that were trying to push the market down, but because the buyers were also there, they had to bring the market up, and until there was until the open and the close were at the same price. So that's why we had to have the hammer. So, but what you have to know about the hammer is that there is another type of hammer which can also be invented, which is called the invented hammer, which also has the same characteristics of a hammer, but they come differently. So here the characteristics of the hammer is that, on the other hand, inverted hammer is exactly the opposite a hammer facing down. So what you have to know about this one is that the hammer will be looking up, because it will be telling us that the trend is about to go up, but also the hammer is looking up. But the inverted hammer is the same concept, but it will be looking down. So whenever you see a hammer which is facing down, know that the buyers are still in the market, even though the buyers would have tried to push the price up, but the sellers would be also would be saying that we're also still in the market. That's what you have to know. We're still in the market, so we will try to push this candle down, which is a representation of that the sellers are also still there. But because what you have to know about the inverted hammer is that the green version of this candlestick is more bullish, and it gives an indication of the trend change. So the green candle is the most important candle whenever you see an inverted hammer, because it's a sign that we are still going up. The buyers are still in the market. And what you have to know is that a long shadow is what you will see with that whenever you see this inverted hammer, and while the close and the open and the low are at the same price. So the price of the open and the close, they will be almost the same. They are not the same price, but they will be almost the same, because of being pushed by the sellers when it's taken down, until it gives that little that little candle, that little difference between the open and the close. So that's what comprises of an inverted hammer. So this signals a potential change in the price direction as the bears were unable to follow up the short-term low by allowing the bulls to push the price higher. So the bulls will be in the market, they will be strong, and there will be a lot of money that will be injected in the market. So which means that there is now going to be a turnaround, and the momentum is gathering for the bulls that is trying to push the market up. So a hammer clearly states that it's the end of a bearish movement, but the beginning of a bullish movement. So that's more of the hammer, and the hammer is very important. But what you have to know about the hammer candlestick is that it's not the only candlestick that can indicate that the market is about to go up. But what you have to know is that there are other indicators that are there that you should also use, like the Bollinger Bands, like the Fibonacci retracement. Those are the other things. There are so many of them, there are plenty of them, and we will come and discuss them in the near future as we're moving forward with this channel. I will be explaining a lot about the indicators. So what you have to know right now is that this is not the only candlestick that you have to rely on. You need to be very good with others. So don't worry, I will make you to understand them all as we proceed in this with these lessons in the giant markets. So as a giant, the idea is to give you freedom for you to understand the markets, to know, because the markets are not only for you to take your money and go and blow it in the market, but you have to be having a clear understanding of how the candlestick function, of how the market reacts, what causes it to go up, what causes it to go down. So one of the causes is what we're actually here for. So right now, I've just finished with this segment of making you to understand the candlestick. On the next segment, now we're going to speak more of the news that are affecting the markets. So on the news, we're bringing up a new segment of news whereby we wanna be talking about the economy of the countries. So today we're going to be talking about the economy of the country of Nigeria. So South Africa and Nigeria, these are the two great powers when it comes to the gross domestic products, that the GDP of Africa. They have a very high GDP. So what we have to know is that in this coming year, which is the year of 2022, there are high chances that there will be a recession in the countries. So we have to analyze and see how the economies of these countries are standing. So there are high chances that in this coming year, there will be the cash of the countries will be in serious problems, like in terms of the value will go down in terms of the cash of the countries. So right now I want us to analyze the country of Nigeria. So what you have to know is that already the value of the cash of the Nigerian naira has gone down by 4.5%. So what do you mean when I say it has gone down by 4.5%? We're comparing the naira with the US dollar, because the US dollar is that currency that a lot of countries use when they are doing their foreign trades with other countries. So what you have to know is that what they are estimating to happen in this 2023 is that Nigeria will Nigerian currency will lose value by 20% in 2023, which is not a good news for any country like Nigeria. So these are one of the critical things that are going to happen as we are going to be facing recession in this 2023. So this is very important things. These are very important stuff for this country, right? So Nigeria, it is there's something we have to understand about the Nigerian currency. The Nigerian currency it has oil and gas as their main important it's their main things that are bringing that are making their GDP to be very good. So so what you have to know is that oil, it brings 40% of the GDP of the country, while the 80% of the foreign exchange with earnings. So Nigeria is one of the powerhouses in this African continent. And what you have to know at the present moment is that $1 is converted. You can convert that one into 440 naira. But this has not been like this in the past years. Because in 2016, $1 was equivalent to 200 Nigerian naira. But as time went on, because of inflation and interest rates and everything, in 2017, $1 was equivalent to 350 Nigerian naira. But things have changed so far in 2023 because now the $1 is equivalent to 440 because of the rising of price, because of these interest rates, because of the inflation these are the things that are actually eating the value of the Nigerian currency. Like you should know, Nigeria has oil, it has gas, so these are the things that are that are making the currency of Nigeria to be very strong. And what you have to know is that 95% of the Nigerian products are imported. The only thing that they export a lot is the oil that they have. So that's why, if as much as other countries are facing a high interest rate, high things that are actually happening in those countries, what you have to know is that Nigeria is suffering at the present moment because they import a lot of things. A lot of the things that they have in their country, they import them. So which means for them to buy things out of the country and bring them to the country, it's now a serious problem because of the interest rates and the inflation that has gone up. So what you have to know is that the inflation at that country is around 21.7%, which is a serious high inflation. Because in a normal country, they say the inflation, if it's a stable country, all those developed countries, a stable inflation should be around 2 to 3%, 2 to 3%, or 2 to 3%. That's a stable inflation. So which means the inflation in that country is very high. So what we have to expect with Nigeria in 2023 is that there will be elections that will happen on February. So if the elections happen again and they don't go accordingly, there are high chances that there will be the inflation will go up because of the elections, and a lot of things there will be a lot of problems. That's why they are expecting for the cash to lose value by 20% in this coming year. So that's what you have to know about the currency of Nigeria and the economy of Nigeria. So in the upcoming episodes, I think we will focus even on understanding the businesses and the the biggest companies that are in Nigeria, so that we can easily understand what is actually happening in those countries. So as I continue again on the business side, right, so Netflix has collaborated with Nike. So it's another interesting collaboration that has just happened for 2023, whereby no one saw it coming, but the CEO of Netflix has decided to want to collaborate with Nike. So Netflix breaks out into fitness content with upcoming launch of Nike training club classes. So Netflix is one of those companies that had a very good stock in 2022, but they lost the value of that stock from around $800 and something to now it's around $100 and something, which was a serious decline. So, and Netflix was one of the big powerhouse in terms of the media last year. So right now they've seen that the only way of them going back to where they belong, they have to come up with new ideas. So this is one of the ideas that Netflix has come out, whereby they are now introducing a fresh content. Because a lot of people, when people have monies, when people are working in proper companies, they want to also make sure that they maintain a healthy lifestyle by going to the gyms and everything. So which is a good move for Netflix. And what you have to know, like on my previous episode, I talked about Netflix investing around 200 million on content again. So Netflix is trying to come up with new ideas, as they know that there's Disney that is also around the corner. There's Apple that is also doing movies. So they will want to come up with new and fresh ideas so that they gain more subscribers into their platform. So, right, on the other hand, Amazon says it will cut off over 18,000 jobs, more than initially planned. So Amazon is actually cutting off jobs, just like any other tech companies. A lot of tech companies, they faced a cutting of job last year. So Amazon is not the only company that is actually cutting off jobs. So the tech companies, they took up around 97,000 jobs last year alone, which is not, so Amazon is not actually the only company. There are other companies like Microsoft, Coinbase, Micron, Twitter, Spotify, etc. There are plenty of those companies which had to cut off jobs. So the tech industry led job last year by 695%, which is a serious huge percentage. So a lot of people, they had to lose their jobs because of the high interest rates, because of the high inflation that happened. So they decided to cut off jobs. So it's one of those things that will happen in this year in the tech industry. So the other thing that I want to talk about today, I want to talk about the three industries that are very important in the American economy. So right now I will start with the Dow Jones. So what you have to know about the markets, the American businesses, is that they created a platform whereby they said we'll be cutting the most profitable companies and bring them into one basket. So the first basket that they said we want to create, they said we'll create a basket called the S&P 500, where the S&P 500, it's where all the 500 big companies of America are placed. Then out of that S&P 500, they said they want to create the NASDAQ. The NASDAQ, it's where the 100 companies of America are placed. Then they said we'll create, out of that, from the NASDAQ, then they created the Dow Jones, where it's only the 30 companies of America are placed. So I'll talk about the Dow Jones, because the Dow Jones is the value of the American companies, like it's the weight of America, where all those companies that are making serious monies, the co-founder, the pillars of America are there. So you're talking of the Apples, you're talking of the Boeing company, you're talking of the Microsoft, you're talking of these Netflix. So it's a combination of so many technology and other different companies which are very important. The companies that make the defense of America, the Nikes, the clothing labels, all those big companies, they are also in Dow Jones. So Dow Jones is very important, and it's one of the volatile when people are trading it, because it moves very fast, as those companies, they have a serious market cap, and their value is very big. So it makes the market of Dow Jones to move very fast. Then when we're talking of the NASDAQ is the technology of the car of America, where all the where a lot of technology companies, you find them in the NASDAQ, like it's the 100 companies of America. So especially technology companies are found there. So a lot of people like to trade the NASDAQ because it's not as volatile as the Dow Jones, but it has a big movement and it gives a good returns. Then we have the S&P 500, which represents the whole market, like the 500 best companies in America. So as a lot of people don't like trading this one, but it gives you a clue and an idea if you analyze it, because it will be telling you of where the market is going at that time. But because we're in Africa, Africa is governed by gold. So there is the other metal that is like to be traded by a lot of people, which is the yellow metal, gold. So gold is also traded a lot by people because when investors, they want to run away from the US dollar, they go to the gold, because they know whenever there is inflation and whenever there are high interest rate, gold is where a lot of investors go and hide their monies, because they know that gold doesn't lose value and is not affected by inflation and other things that can eat it. It stays the same. So these are the four actually big things that are traded by a lot of people. So when you understand gold, we'll be talking more about gold as we go, so that people can have a clue of what they can actually trade in the market. So right now we're going on our next segment, which is called the word of the day. So as a giant, you have to understand the words, the lingo, the dialect, the things that are needed, so that you may be in a position to hear when these guys who are on TV, these analysts are talking about the markets. They use a certain words. There are certain words that they use. So today, on the word of the day, we want to talk about the word debt. So debt is a sum of money that is owed or due. So a lot of people are in debt, especially countries are in debt. So what do you mean when we are saying a country is in debt, or you are in debt? We're talking about that you have to make a payment. It's a certain payment that you have to go and make. So it's money that is due. So it's one of those simple words, but that makes a serious difference when you are reading an article or when you are listening to these market people. So that's the word of the day. Then we're going to talk of the quote of the week. So as a giant, you have to be motivated. We need serious motivation. We need freedom. And the freedom that we need is to be motivated for us to wake up tomorrow and be able to continuously understand the financial literacy. So on the quote of the day today, I want to tell you that your dreams are what wakes you up. Don't put them to sleep. Can I say it again? Your dreams are what wakes you up. Don't put them to sleep. So, as I know that you have came even this far to listening or to be in this episode, what I know is that you have a dream, and the same dream that you have is the one that has made you to even listen until to this episode. So don't put them into sleep. You are the same person who can put your dreams to sleep, and you are the same person who can make your dreams come alive. So how do you make your dreams come alive? Is to continuously research, continuously do what you are actually doing at the moment by listening to and be researching more about the financial literacy. So the same dreams that have made you to wake up and do this are the same dreams that are going to take you higher, but you are the same person who can take them to sleep. So don't take yourself, don't make your dreams go to sleep, because you are liable for that. So make sure you have the energy and the zeal and continuously do it, because it's doable. So this was the broadcast for today, and this is what I brought for you today. And I say thank you for listening, thank you for coming this far and enjoying the giants markets. So enjoy and look forward even for the next episode. We are continuously and we are going high in giving you what you need. Thank you. Cheers. Bye. Peace.